Today's top stories at NBR: new COVID-19 support payment, A2 milk shares climb, freightways a half of 2 quarters, and there's more coming right up. Kia ora and welcome to NBR Today, 100% subscriber funded and proudly brought to you by you, as is every story at nbr.co.nz. It's Monday, February 21st. I'm Paul Brennan. Thanks again for joining us. Broking firm Jarden has confirmed a $60 million capital raise to fund investment in new business and growth opportunities in Australia and New Zealand. Rumours of the external fundraise had been circulating in the market this month, with details set to include a capital note convertible into equity 6 years hence. Jarden said the capital had been committed by private family offices connected to the firm in Australia and New Zealand. The investment follows Jarden's expansion into Australia, where it received its ASX licence in April last year. The firm said it would open offices in Melbourne and Perth this year, adding to its existing offices in Sydney and Brisbane. Struggling businesses will be eligible for a new COVID-19 support payment until at least the peak of the Omicron outbreak passes. Finance Minister Grant Robertson said applications for payments would begin next Monday and would be paid fortnightly for the following 6 weeks, but would be extended if needed.
Applications for the first payment will open on the 28th of February, with payments starting from the 1st of March. It will be available on a fortnightly basis for 6 weeks, so 3 payments in total. We believe that this will get people through the worst of the Omicron outbreak, but as I've said, we constantly monitor the situation and we do have the option to extend this if necessary.
Finance Minister Grant Robertson. Shares in infant formula specialist A2 Milk climbed 11% after the company posted better than expected half-year results and expressed confidence in the strength of its brand in China. By early Monday afternoon, the stock was trading at $6.17, up 9.8% on its opening price, and just off its day high at $6.23. Net profit for the 6 months to December was $56.1 million, down 53% from $120 million in the same period a year earlier. Revenue was $658.8 million, down from $676.5 million. On a conference call with analysts, Chief Executive David Bortolussi said the first half result was in line with the company's own expectation. Chorus is looking to create new revenue streams as its mandate to build New Zealand's ultra-fast fibre network is nearing completion, but will first need to shed business line restrictions placed on it by the government. The NZX-listed company's revenues are tightly regulated, but after a decade of fibre network building, a new regulatory framework that took effect from January 1st has allowed the company to upgrade its dividend policy and consider what its post-rollout revenue profile might look like. Chorus's Chief Executive JB Rousselot said the government's view of the structure of the telecommunications industry and how Chorus fits within it needs to change. Freightways' interim result is a half of 2 quarters, with the first 3 months hit by lockdowns and the second buoyed by high residential deliveries and strong growth in medical waste, the company says. The business recovered strongly in the second quarter after New Zealand's COVID lockdowns in August and September, with market share gains across its portfolio of brands helping to boost revenue by 7.7% to $441.9 million. Freightways brands include New Zealand Couriers, Post Haste Couriers, Big Chill Distribution, DX Mail and Medex. And New Zealand Post's first half profit was up 122% as it doubled earnings from its parcel delivery business, while letter deliveries continued to slump. The state-owned enterprise generated a profit for the 6 months to December 31st of $60 million, compared with $27 million in the previous first half. The parcels business brought in earnings of $24 million, up from $12 million, delivering 52.7 million parcels, with 19.1 million just in the Christmas peak of November and December. Income from mail dropped by 7.1 million, with 23.9 million fewer letters sent in the period. NZ Post Chief Executive David Walsh said it had delivered 9 parcels a second through Christmas and helped many Kiwi businesses to generate revenue where they might otherwise have not been able to. The full details of those stories and more are at nbr.co.nz right now. Tomorrow at NBR, in his Playing the Ball column, Martin Devlin dissects the Silver Lake deal with New Zealand Rugby, while in Margin Call, the Harbour Asset Management team looks at the bond market response to rising interest rates. I'm Paul Brennan. Join me again from around lunchtime tomorrow for the morning's NBR trending stories, and then again from around 5:30 for another NBR Today.